Good afternoon. This is Bob Iaccino coming to you from the CME Group trading floor in Chicago, talking crude oil futures, which broke down below 67 to reach a low of 66.85. A pretty weak day, almost down 2% when it was on its low, as the Iran risk fades. Now, why did it really fade? Well, after a rally driven really by Israel and Prime Minister Benjamin Netanyahu's presentation on national television, calling Iran a tremendous liar on their nuclear program, saying they've cheated the entire time, that they're still developing nuclear weapons. They always have been. And this particular presentation seemed aimed at President Donald Trump, trying to get him to pull out of the Iranian nuclear deal signed by President Barack Obama. That's kind of faded now. There was a pretty good rally, so it's taken most of that rally out of the market. And that happens as you sift through the rubble of these kinds of things. Is this particular presentation going to sway the president? Well, probably not. He may have his mind made up at this point. He may not. But a lot of what Prime Minister Netanyahu said, the things that are considered true are considered old news, and the other things aren't really considered verifiable. Now, I'm not making a claim as to whether what he said is true or not. I'm just saying the way the market is looking at it right now, it's selling off this Israel and Prime Minister Netanyahu news. That's why I say Iran is fading a little bit from the price of crude oil. And with no more bullish catalysts, overall, the fundamentals of crude oil are bullish, but there have been day-to-day and sometimes every other day bullish catalysts, and right now we don't have any today. So you'll get sell-offs, you'll get profit takings when that happens. So a lack of follow-through on the geopolitics is really another reason why crude oil is suffering today on the sell side of the ledger. You've got no acceleration in the Yemen conflict. You've got the selling of the Benjamin Netanyahu bid that was put in yesterday. We don't have any sort of comments out of OPEC or non-OPEC producers. Venezuela is what it is. We're still at elevated prices with all these bullish catalysts already priced into the market. There's been no new catalyst. You get profit taking when that happens. So that's what I call a lack of follow through in geopolitics. And then on top of that, with commodities in general, when there's nothing else going on, the dollar takes center stage, and that inverse correlation between commodities and the dollar, and crude oil is not immune to that. The dollar strength continues with a Fed meeting beginning today, and that particular Fed meeting is not expected to bring about any changes. So what does that mean? That means you expect the Fed to still be on the pace of 3 rate hikes for 2018, one of which is already completed, and arguably without a lot of inflation catalysts. So that tends to be sort of a tailwind for the strong dollar, which is a headwind for commodities. Now, the dollar could be capping out here, and we could get a surprise out of the Fed, and we could get some bullish catalyst out of API today. We could get a bullish catalyst out of EIA tomorrow. Watch those capacity utilization figures for the refineries to see if turnaround continues. That could be a bullish catalyst. But as we sit today, weak crude oil prices right around that $67 mark is where we finish. This is Bob Iaccino talking crude oil from the CME Group trading floor in Chicago.